Hello and welcome back. My name is Josh, and today I want to discuss one of the biggest mistakes you can make when investing, especially early in your investing journey, and that's not taking risks. So, no matter what you do when you start out, you're going to pick some good companies and you're going to pick some bad companies. But the key is you should actually, you don't want to take unnecessary risks, but risks, as long as you learn from them, and when you do make a mistake, then they're valuable. When you start out, if you just put your money in an S&P 500 ETF, you'll do fine, right? You're gonna make some money, but it's not that hard. You could also hand your money over to a money manager, and they'll make money for you, like almost guaranteed. If you're doing your own investment, there should be one reason why you're doing it. Well, two. One, you're hoping to beat the market. You're hoping to do better. And two, the second reason is you're hoping to learn and gain more valuable skills about understanding businesses and improve your ability to invest either in the stock market or in private businesses and how businesses work. And that's really what I started doing. I work for a medium-sized private company, tech company, and I manage one of the divisions. And I got into investing much more so I could really understand what are the main drivers of value in a business. How does a business improve their revenues? How does that revenues translate to their company value? How do you increase margins? What are some strategies that people can use, and what do the best companies have in common that tactics they've used to improve their market share, the competitiveness, all these things. So that's how I started looking at it, so I could improve up my own job. Along the way, I made a lot of money, which is nice, but it also actually did make me better at my job. Now, along the way, did I make mistakes? Yes, I made a lot of mistakes. One of the first ones, when I started out, I just looked at a high dividend company and just said, well, high dividend must be good. It's paying 9%. That's great. I didn't realize that you have to understand not just is it a high dividend, and why is it a high dividend? Is it because the stock price is down, but the dividend's still being paid out? And if so, why is the stock price down? Maybe it's because they said they're going to cut revenues or they're lowering guidance. If that's the case, oftentimes when you see a company with a really high dividend yield, it might not be the safest dividend. What I mean by that is they might cut the dividend, which further cuts the stock price. And that's exactly what happened here. I bought a company that had a 9% dividend yield. I thought, oh, this is great. And then 6 months later, they said, hey, you know what? Our revenues aren't covering, we're not making enough money to pay out this dividend, so we actually have to cut the dividend. So then I was making less on the dividend. And on news of that dividend cut, the stock price went down too. So that was a major lesson for me that I learned about analyzing a business and their dividend yield. I'm trying to think of some other important lessons I made. I learned one about um, options and time decay. I made a lot of money on options. I was trading in and out of weed stocks before legalization in Canada. I made a boatload of money. It was crazy how easy the money was coming. Like every day I was making 3 grand. It was stupid for doing nothing. Um, and then one day the market didn't rip 10% higher. It went up like 3% or something, and my options actually went down slightly. And I was like, why is that? Like the underlying asset price went up, but my options based on that did not. It actually went down. So why is that? So I did some research and I looked into that and I found out about time decay, and basically, long story short, with you have options, if the stock does nothing every day, the price goes down. And even if it goes up, it might go down if it's not going up enough as you get closer and closer to the expiry date, which is when the options actually can be renewed. So again, that was something complex. Another one was leveraged ETFs. So there's these things, leveraged ETFs, where it's like triple levered S&P. And I said, oh, look, the S&P has gone up 7%. So if this is triple levered, then that should be like, or it goes up 7% a year. That means I should be making 21% a year. Oh my God, I just found the biggest hack ever. I'm going to be rich. I'm going to put so much money in this, blah, blah, blah. And long story short, the way triple levered ETFs work is they reset their volatility every day. So what that means is at the end, they get 3 times leverage. They invest in the S&P at the beginning of the day, and then they sell it at the end of the day, and then they reset. And then at the next day, again, they triple lever up and down. And the reason that's bad is, try and give an example. Let's say the stock price is up 50% one day, and it started at $100 a share. So now it's 150. Then let's say it's down 50% the next day. Well, that down actually has a bigger impact. Down 50%, now you got 75. So now even if it goes up again 50%, what's 50% of 75? It's about 32.5, if I'm not mistaken. So you're now just over 100. So you've now gone up 50%, down 50%, up 50%. So two up 50% and only one down 50%, and yet you're barely more than where you started. And that's what volatility does. And these triple levered is they're good for a daily strategy if you think there's going to be a big movement in the short term. But in the long term, the volatility eats away because every time there's a down day, it destroys your gains, absolutely destroys them. So I learned that mistake. So again, you're going to make mistakes. Learn from them. The biggest mistake you make is not taking any risk because you're not going to learn anything. It's the same thing. I was speaking to someone yesterday about cryptocurrencies, and I've put money into some cryptocurrencies that have done really well, and others have done less well. And we're talking about Shiba Inu coin, which I'm not a believer in. But the fact is, I said, you know what? Even if I'm wrong about it, it's like people. I was talking now about me. Even if the shit coin does go to zero, Shiba Inu coin, it brought people into space. It brought people's interest, and they got the creative juices flowing, and they started understanding what cryptocurrency is, getting more brain power into the industry, and that will teach people lessons about what works, what doesn't, and create the next big thing in crypto. And so I believe it's the same in any business that like you're going to make mistakes, but as long as you learn from those mistakes, you're going to get better, you're going to improve. And when you're young and not that well off, yeah, if you lose 500 bucks, it sucks. 1,000 bucks, it sucks. It's not going to be fun. But, is $1,000 really going to change your life? For most people, not. There are people at the lower end that it might be, do or die. And for those people, I would say don't risk it. But if you have a little money that you can invest and play around with, I actually do think it's a good idea to exactly that, play around with. You're going to make mistakes. It's like there's just not everything's going to work out. No one bats 1,000, not even the best. Warren Buffett doesn't bat 1,000. Elon Musk doesn't bat 1,000. Everyone makes mistakes, but you got to make sure that you learn from your mistakes. If you make a mistake and don't learn anything from it, it was useless. So like my grandfather used to say, it's the school of hard knocks. If you lose $1,000 and you learn a very valuable lesson, then that was money well spent, because you learned a super valuable lesson that will make you more than $1,000 in the future. And that has happened many times for me. I've made countless mistakes, but each of those mistakes has taught me something and helped me get better. And that has helped improve my investing career tremendously to a crazy degree. So make mistakes. Don't be afraid of them. Don't risk more than you can lose. Again, don't go hungry for this. I'm not telling anyone to do this. And if you are in that part of the socioeconomic spectrum, don't do this. But if you have a little money to lose, have a thesis. Like, don't just blindly invest, but say, like, here's why I think this is going to happen. Write it down. Say why you think it's going to happen. Just write your prediction and check it. And if it doesn't turn out, say why. Why didn't it happen? Was it market forces? Was it something with the business? Did the business just give unrealistic guidance? Okay, what did you learn from that? Well, maybe you can't trust management. Maybe you have to sandbag a little. And so if they say we're going to grow 50% a year, maybe you say, okay, maybe I actually have to approximate they're only going to grow 30% a year. Is it still a good investment if that's the case? Maybe, maybe not. Maybe it was a good investment in the long term, but not in the short term. Maybe it went through a long, like with Tesla, where it had a long type of doing nothing, and then it shot up 10 years later. Did you understand the product well enough? Was there people who suddenly said, you know what, I don't really like this product very much, or they changed the UI and now it sucks? Really try to understand why you're investing. What's your thesis? I think you should have a thesis with everything. What's your thesis? Why are you investing? What do you predict is going to happen? And then track it. And that's my advice. And if you do that, even if you make a mistake, you will learn from it and you will get better. I do this every year also for fantasy sports. I'm a huge fantasy sports guy. And every year I write down who I draft, who I didn't draft, who I didn't want to draft, who I thought was overrated. And I can tell you there are a number of players that I thought were overrated and did really well. So I said, what was I wrong about them? And sometimes it's like, well, they just had a lucky year. Sometimes that's the case. And you're like, hey, I was wrong, but they just got lucky, But sometimes I was like, you know what? I never thought about this or this or this, and I analyze in a different way, and it allows me to better understand players who might be potentially undervalued. I'm actually a big believer that you should also do fantasy sports. I think it helps you. I think it works in the same areas as investing, where you're looking for undervalued assets and you're competing in a marketplace of different ideas. Just like people believe different stocks are going to do well or poorly, people are going to think different players are going to do well. There's data to back it up, and you can actually analyze how the season turned out. You know, were you right? Were you wrong? You need a scorecard. If you're not keeping track, you're never going to know. I believe that for betting, I have a couple friends that do betting, and they all think they're up. They all think, oh yeah, I'm a winner. Everyone else is the loser. I guarantee that's wrong. Everyone thinks they're a winner because they don't keep track. And if you lose 20 bucks here, 20 bucks there, 20 bucks there, 20 bucks there, and then you lose win one that's 100 bucks, you feel good, but all those 20s add up and you're actually down, for example. So you got to keep score. So just to recap, here are my thoughts. One, don't be afraid to make mistakes. The biggest mistake you can make is not taking any risk. So take some risks, especially if you're young and you got some money to burn. Two, make sure that you keep track of your thesis and understand how it worked out. You got to keep a scorecard. If you don't keep a scorecard, um, you're not going to learn any lessons. And three, that's the big thing is make sure you say what was the lesson at the end of the day. Again, it's only a mistake if you didn't learn a lesson. If you learned a lesson, you just say, hey, I spent $1,000, but learned something valuable. So that's my advice. Let me know your thoughts. What's your biggest mistake? You know, everyone likes to talk about their biggest winners, but no one likes to talk about their biggest mistakes. So let me know what your biggest mistake was in the comment section below. Thanks so much for watching, and talk to you next time. Cheers.